Redfin CEO Glenn Kelman is predicting the biggest U.S. housing crash since the Great Recession. With the Federal Reserve aggressively raising interest rates, mortgage rates are on the rise. That is making mortgages unaffordable in an already expensive U.S. housing market. Sensing that home prices are in free fall, home buyers are now pulling back from the market. Home sellers are having to cut prices and offering more concessions to attract buyers. But, is this just a market correction? Or, is this a housing crash? What does this mean for the real estate market? What does this mean for the future of the economy? And, what does it mean for the future of the United States? But, before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. For the past 5 years, home buyers were typically having to pay over listing price and compete in a bidding war. But now, the average home in the United States is selling for less than its list price. Mortgage rates are the highest they've been in 14 years. The rate for the 30-year fixed mortgage is now reaching nearly 6%, according to Redfin. These higher mortgage rates are having a dramatic impact on what home buyers can afford. This is the sharpest turn in the housing market since the housing market crash in 2008, said Daryl Fairweather, chief economist at Redfin. Despite all of the publicity about a housing market crash, home prices are still higher than a year ago. The average home in the United States is now selling for just under $370,000. Inflation and high interest rates are slowing down the market. And the United States economy is now teetering on the brink of recession. We haven't seen interest rates this high since 2008-2007, said Fairweather. So it is a big change from the housing market we've all gotten used to, Fairweather added. With these higher interest rates, mortgages are up about 40% from a year ago. Buyers just don't have the 40% extra money to put towards housing every month, Fairweather said. A lot of homebuyers had to drop out and go to the rental market instead or choose not to buy that second home or investment property, Fairweather continued. Redfin noted that larger West Coast cities like San Francisco and Los Angeles are sensing the greatest impacts on house prices. When you're talking about a $1.5 million home, that's an extra $1,000 a month towards a mortgage payment, continued Fairweather. In New Orleans there are more homes on the market in his area than in the last 2 years, said President of the Metropolitan Association of Realtors David Favre. While the seller's market might be as competitive as it was earlier this year, Favre said now is still a good time to sell. If your property is priced well, you will be very successful, Favre said. Now is still a good time to buy if you qualify for a mortgage because you can always refinance when mortgage rates go back down, said Fairweather of Redfin. If you find a house that meets all your needs and you're going to stay in it for at least 5 years, it's still a great time to buy, Fairweather said. Oddly enough, Fairweather does not think that the U.S. will enter a 2008-style housing crisis. People who own homes right now are in a good financial position generally, Fairweather said. The criteria for getting a mortgage is really high, continued Fairweather. T's not like during the 2008 housing market crash when people were getting mortgages they had no business getting, Fairweather also noted. Homebuyers need to consider if they'll still be able to afford their home if they unexpectedly lose their job, added Fairweather. But Redfin and its chief economist Daryl Fairweather are not the only experts currently weighing in on the state of the U.S. housing market. Mark Zondi, chief economist at Moody's Analytics, said, with this backdrop, home prices will soon undergo a correction. Is the housing market crash of 2008 going to repeat itself? Crash is what happened back in the financial crisis. That was a crash, Zondi said. That's not what we're gonna have here, Zondi continued in an interview on CBS News. First-time buyers are locked out of the market, unable to afford rising mortgage rates, Zondi continued. At this time last year, the 30-year mortgage rate was 2.79%. Today, that rate is 5.66%. With buyers getting skittish and home sales falling rapidly, investors are waiting in the wings. The next thing to happen will be for house prices to adjust, Zondi explained. And we will see some price declines likely nationwide, Zondi continued. For hot pandemic boomtowns that were previously juiced up in the West and particularly Mountain West and South to the Southeast, Zondi added. Many of these real estate markets are seriously overpriced. San Jose, California is down 10%. Seattle is down 7%. San Francisco is down 7%. Los Angeles is down 4%. Denver is also down 4%. Zillow has sold its portfolio of properties at a substantial discount. Zillow stock is down almost 70% from its 52-week high. The CEO of Redfin has warned that his company is quickly selling off properties in its portfolio. Redfin stock is down over 75% in 2022. The United States housing market is at a significant inflection point. Boise, Idaho is 72% overvalued. Austin, Texas is 67% overvalued. Ogden, Utah is 64% overvalued. Las Vegas, Nevada is 61% overvalued. Atlanta, Georgia is 58% overvalued. Phoenix, Arizona is 57% overvalued. Provo, Utah is 57% overvalued. Housing prices are falling in many U.S. cities, but how far will they go? Experts predict that house prices could fall by up to 25% over the next few months. We will see some meaningful price declines, Zondi further noted. A $500,000 home in Boise, Idaho, may see prices fall between 10% to 15%, continued Zondi. Zondi said, I predict that large price corrections in other once hot cities like Charlotte, Phoenix and Austin. Redfin CEO Glenn Kelman said, some of these markets already showing signs of turning. 70% of homes listed for sale in Boise had already had their prices cut. Denver, Salt Lake City, and Tacoma followed, continued Kelman. Sellers are reluctant to sell their houses in a falling market according to Redfin CEO Kelman. Homebuilders are having to offer aggressive discounts. Customers are canceling contracts. Tech layoffs are a primary reason why home prices in technology hubs fell 0.77% from June to July of this year. Hiring freezes and layoffs have impacted just about every corner of the tech industry. Tesla laid off 229 autopilot workers. Netflix cut 300 employees. Coinbase cut 18% of its workers. Robinhood cut 23% of its employees. But experts say that many tech employees are well positioned to find new jobs just weeks after being laid off. And as of June, 64% of tech CEOs say it's getting more difficult to hire the right talent. But, what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.